Oftentimes, I meet with clients for the first time in what we call a discovery meeting, and I find out that their risk management planning, or what I like to call the defensive part of their financial planning, has really never been addressed. Many people who work with a financial advisor talk about retirement planning and social security strategies, 401ks, their projected retirement date. These are all very common conversation that most people have, but not too often do I hear clients who are hiring us for the first time say that they've ever discussed their home and auto insurance or their life insurance with their financial advisor. So why is this important? Well, as your net worth grows, so does your need to protect that. And the irony is that most people's home and auto insurance agent have no idea of what their net worth is. So think about that for a second. The car that you're insuring and the home that you're insuring is the reason you bought the insurance policy. However, the older you get, the car may be the least important part of the home and auto policy. How's that possible? Well, your home and auto policy have what's called liability protection on there. And that's if somebody sues you at your home or while you're driving your car, it's protecting your net worth beyond protecting the asset that you're insuring. So a couple that's worth $1.5 million when you add everything up and haven't really looked at their home or auto insurance policies for quite some time may figure out that if they pull out in the intersection tomorrow and God forbid hit and kill somebody, that their car is going to be fixed, that person's car is going to be fixed, but they only have $300,000 or maybe $500,000 of personal liability protection on their auto insurance. Their net worth is $1.5 million. That's a major issue. And so more often than not, when we onboard a new client here at the Affinity Group, what I find is that their liability protection on their home and auto is nowhere even near close to the net worth that they've accumulated. So this is just another case of why proper planning is integrated and comprehensive. That your auto policies and your home policies, as well as your life insurance, are very important in protecting your overall net worth. Speaking of life insurance, in 2012 and since then, the life insurance world has kind of really been turned upside down by the advent of what we call combination policies that allow clients to combine long-term care and life insurance in one product. So like home and auto, many times when we review a client's situation, we find that their life insurance policy that they put in place in the 80s or 90s is really a death benefit only policy and has not been updated to conform with 2012 standards. Today, a life insurance policy can kill two birds with one stone. It can be there to provide tax-free death benefit and or tax-free long-term care. So if you have an older policy that's only providing a tax-free death benefit, you absolutely want to see if your policy can be upgraded and modified to protect against both risks. Aging gracefully and aging in your own terms is a problem that we all have to think about as we're all going to age. And so if your life insurance policy can do double duty, you're accomplishing more with the same dollar. So these are just a couple areas within risk management planning that we find very important to cover with our clients during our planning process.